Robschild, no investment advice. Welcome to the show where we view the financial markets through Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Friday the 13th. You guys remember the last time we had a Friday the 13th? That was when the 3-month, 10-year uninverted, which is typically like recession time. Anyway, Friday the 13th, June 13th, 2025. Today's episode begins with our title, Resiliency Day. And I want to bring up the Strait of Hormuz. I'm no geopolitical expert, but it seems like Iran and Israel are basically starting an all-out war. And seeing as 20% of the world's crude oil supply goes through the Strait of Hormuz, I'm surprised that even when we just started getting wind about pulling people out of the area, you know, back on Tuesday, Wednesday, oil, we are currently up only 13% in oil, peaking at the max fear of 20%, but then calming back down. If the strait gets closed off, I think that would imply oil going up much higher, and the implications on other markets would be much stronger, but it doesn't seem to be a concern right now, and so that's why I titled my video today Resiliency Day. It doesn't seem any markets are as concerned about this as I might expect. But this is not an area of expertise for me. Comment your thoughts below. I'm very curious to hear what you guys think about this whole craziness going on. Let's move on. Community topics. What moves, if any, did you make today? Some of my puts expired worthless. I had on URA. I had on Microsoft. Two other markets also experiencing a lot of resiliency, adding to the Resiliency Day theme. Again, if you made any trades today, I'm curious. Go ahead and tell me what you did today in the comments. Share with each other. It's a great community here on Robschild. Coming up, continuous tariff updates. Beginning of July, the unpause is supposed to happen. Remember the last time the tariffs hit the tape, on Liberation Day, markets pretty much crashed until we hit the pause button. So it'll be interesting to see how that ends up playing out. Also, federal budget updates, and I'm going to add one more. Obviously, the Iran-Israel conflict. If you saw my show, by the way, yesterday after this thing escalated, it was only like a rumor at that time. Just, I didn't want to downplay the severity of what's going on. Obviously, it seems like a fairly serious situation at this point, so no disrespect to anybody out there. Anyway, yeah, so, we're going into the weekend, and we'll, see how things go. A lot of things can happen over the weekend, and then Monday, anything can happen the way that I see it. I've never had my crystal ball be so foggy before. One more thing to add to the fogginess of my crystal ball reading. I've been talking about sort of overly excited about the continued claims kind of spiking up here. Yes, it's a spike, but I started looking through this chart, through history, and the truth is continued claims, they do go up sometimes, and then we get to elevated levels, and there's times we go down. We can go up and down without recessions causing, so I might be blowing this out of proportion, thinking that like the jobs market is completely falling apart here. In order for that to really be true, we also need to see initial claims start getting like higher and higher. Once we get to what I understand is 300,000 per week level, that's kind of the smoke alarm going off and saying, hey, there's a fire now. And truth is, it hasn't happened yet. I've probably been overdoing that. Remember, guys, all honesty, I'm just a guy with a crystal ball. I largely do this show for myself, just to think through my own thinking. I'm not always going to be 100% accurate with all of the information that I put out there. That's why I always say that nothing I say is an advice. Definitely cross-reference stuff, topics you're interested in. Take everything that I say, honestly, with a grain of salt. And with all that said, thank you for watching. I love having this community here. I'm almost to that 1,000 subscriber mark where I can finally start monetizing the channel. I'm really excited for that. I do hope eventually to get to the point where this can replace my day job, to be honest. If I get enough ad revenue, my current day job is not a very high paying job. So yeah, so that's one of the longer term goals with this thing that's kind of emerged just because I love doing this, and it seems like a lot of you enjoy my work. So anyway, thank you as always sincerely for watching, subscribing, commenting, and supporting the channel. No major changes to the daily reminders macro views. Just to add one little piece here, if this continues, the problems in the Middle East and oil does rise, unemployment has a history of rising after oil. It adds to the bear case. And no changes to the crystal ball readings, and not many changes to the Robschild portfolio, except these puts are worthless on URA and Microsoft. I'm thinking about rolling over the URA. Haven't done it yet. Moving on to the charts, if you just saw the headlines, you might think that the stock market's sort of crashing today, but and 1% down on the S&P 500. We're down 1.1% today. It's a large move. It's not large compared to what we have been experiencing very recently. But this is what I mean by resiliency day. This market seems really resilient considering what's going on in the world. I'm flabbergasted, actually, that we didn't have a larger move down in the S&P 500, especially with the oil spike today. But certainly there was a lot of selling off across markets. Some notable larger moves to the downside: Nvidia dropping by 2%, Meta 1.5%, Visa down 5%, MasterCard down almost 5%. Some stocks going up. Of course, energy stocks are going up with oil going up. And then Tesla going up almost 2% today. But a lot of red. A lot of companies losing a lot of market cap value. The VIX, the options contracts pricing fear gauge, is above 20, only a little bit on the close today. I am surprised with this stuff with literally... these are missiles. These are like going into cities. Have you seen these pictures and videos? It's crazy. And the VIX is just like not acting like hardly anything happened. This is the kind of movement that you normally see off of like CPI being a little too hot, not a war. Resiliency day. Again, the theme of the day. So resilient that the VIX futures term structure is not even in backwardation. We're still in contango here. Certainly things can change by Monday, but the markets right now are expecting, it looks like they're expecting this conflict to resolve like really quick. I'm not so confident of that myself. Again, I'm not an expert. Maybe you know more than me. TLT, my favorite place to be, also on a closing basis, dropped by 1% today. I talked about yesterday how we had this head and shoulders here that looked really obvious, and we broke the neckline to the upside yesterday. And with this chaos going on in the Middle East, TLT actually ended up dropping today, not acting as the safe haven asset as it often traditionally does. But part of this does have to do with oil. Yields often follow the price of oil, and with the oil going up, yields go up, so TLT goes down a little bit. I did find a new pattern that seems pretty obvious, at least for the moment. It seems we are in this coiling rising wedge, which typically will break out to the downside. So we'll see how that ends up playing out. I wouldn't be surprised to see us go up further in this wedge and then get down to about 50% down. That would be a pretty typical movement. and then from there, anyone's guess. I had the move index on here a half hour ago, and it looks like it hadn't moved. Interestingly, from what looks like from 3:30 to 4:30 today, we had a spike in the move index at the very tail end of the. I mean, this is pretty much after hours. Again, the move index is the volatility of bonds. If I put it back on the daily chart, change it back to candles, it was only a half hour ago that this was actually flat to the downside. So yeah, with bonds moving down today, it actually makes sense for the move index to pop up. I'm surprised that this wasn't higher earlier in the day. I don't know what's going on with that. Adding to resiliency day, HYG divided by SHI gives us an idea where credit spreads are going. When this drops, it means credit spreads are widening a little bit. And yeah, they widened by like a incy little bit. So no added risk to higher risk credit was priced in today. With oil really spiking this much, I'm flabbergasted to see how resilient markets are today. Bitcoin also showing resiliency in my book, dropping intraday and then recovering to be flat on the day. And even riskier when you take Bitcoin out of the total market cap of all cryptocurrencies, sort of similar thing. I mean, considering the amount of beta and risk involved in non-Bitcoin crypto, we're only down 2% today as I record. Again, resiliency. While there wasn't really a run to treasury bonds, we arguably had a little bit of a run to the dollar itself, the dollar actually rising a little bit by 0.3% today. This is the one thing that sort of makes a little bit of sense to me. And then Dr. Copper, with a PhD in economics, is making me feel a little less crazy by dropping as well by 1.9% today. In my book, you take this pivot low, connect it to these other lows, and we're broken down out of it to the downside. I think copper looks bearish here, and that would make sense to me. Gold, as much as a bear I am on gold and how I think it's ridiculously overvalued when you compare it to copper, crude oil, housing, anything out there, gold seems crazy expensive, but it does and will act as a run to safety type haven asset, and that it is functioning properly today. It went up by 1.37%. The reason I'm considering getting back, buying more puts on URA, the uranium fund, is because the price of uranium is still going down. Just as a reminder, we peaked in uranium at $105 back in January of 2024, and we're only at just below $70 and falling right now. I do understand the argument that there's a little bit of a monopoly going on, regarding U.S. refinement of uranium, and the value of the company kind of automatically goes up on that. But for me to be bullish on uranium, I want to see, first of all, the fund URA is at all-time highs, and uranium is 30% below very recent highs. So that math doesn't add up to me still. Not sure I want to lose more money on puts, though, because, as much as Mr. Market can be irrational, he can be more irrational longer than I can remain solvent, apparently, on trying to trade that. Adding to the resiliency, again, of markets, the fear and greed index, we're still in greed mode, guys. Mr. Market is just buying the dip here. Last chart today, the 10-year break-even inflation rate as of, Thursday. I mentioned, I've been talking about this going down and accelerating to the downside, and it still is. I'm surprised that the Fed funds futures actually increased the probability of no cut a little bit for September and July. So this is one thing that I think is important to put out there that the market might be missing right now, is this. This is clearly falling. If this continues to fall to 2%, you can bet your last dollar the Fed will cut. In my book, the chances of that are rising right now, not dropping, despite the potential disruptions in crude oil. But remember, guys, I'm just a guy with a crystal ball, and that's all from me and my crystal ball. I hope you enjoyed. Thank you so much for watching, and I'll see you next time. Robschild.